What is good, my G's? How's it going? All right, yeah, let's dive into it. Summer trading, not that fun, hey? It is just, I mean, we're kind of really consolidating. We're doing this like volatility contraction pattern, which is kind of annoying. But yeah, it feels like we're just edging closer and closer to this like finale of like who's in charge kind of thing. Yeah, so let's take a look and see what we're doing here. First, let's zoom out. All right, so what was there? Ooh, was that Wednesday? Yeah, Wednesday, I guess. So Wednesday right here, high of the week. Let me pull up NQ. Let me minimize this a little bit. Yeah, that's better. Oh yeah, remember earlier in the week? I don't know if I didn't really talk about it in the video. But my God, that was a clean long. That was my one good win of the week. Aside from that, yeah. One loss, another, but break even after. Yeah, so it was a whatever week kind of for me. I've been sick, so I'm really, I wasn't trading much. I really just relax in the summer, kind of. I've gone through my fair share of teeth pulling, hair pulling summers of just frustration, and this definitely looks like one of them. But now you just got to be more nimble. But yeah, for trading NQ, what did I say earlier in the week? I said 28,993 to 28,953, I think something, or 960. I don't know. I marked out this blue box, I think, in the last video. I said this is your go, no go for longs or shorts. So I basically said, if this buys, take longs. So that did into Wednesday. That was really great long. Fortunately, this actually got tapped just pre-market, so I wasn't up. So I had to, as soon as I saw the reaction kind of going into the open, I just was an immediate buyer. I didn't take it for nearly the full move. It was just quick in and out. That's kind of how you have to be in the summer. It's just like you see a move happening, take a long for part of it. Don't try and, get everything. There's no real big extended moves happening right now. Kind of that needs a little bit more time to play out, again, summer months, right? And we're just contracting right now. We're just consolidating, I guess you could say. So yeah, you just take your piece and then get out of there and go golfing or whatever you want to do in the summer kind of thing. Enjoy your summer. The real money is made kind of in the fall and then the start of the new year. That's kind of, and then into springtime. That's where you want to have all the bullets in the chamber. You do not want to toast yourself in the summer, believe me. So anyways, so that was your go, no go for longs. And then very simply, look how it breaks down into Thursday Asia session. So you see initial breakdown, I think, what is this? Oh, that's London session. And then you see kind of pre-market breaks down into Thursday and rejects right there. Again, pre-market, not always, but sometimes getting the earliest of the move, but rejects after there. And then below that, I just believe sellers start to gain control. But yeah, and then kind of choppy. Did I take a trade Thursday? I don't think I did. Yeah, so choppy, and then we're into Friday. So I don't know. I didn't trade Thursday, so I really have nothing to say about it. But we did bounce off this 2.5 standard deviation. Marked it out on ES because ES made the higher high on Wednesday. It was a very clear higher high. I think I talked about in the video already. If I talked about in the last video, I can't remember. But yeah, so marked out from this low Wednesday pre-market into New York Open, right? So this key open right here. Marked it out from this low because it was this low that produced the manipulation of these highs that created the SMT on ES. So we have to start at this low, not this low. And yeah, so mark that out to that high. Then we see kind of our very wide range to just getting edge there before it crashes through. And that what we see are 2.5, that's kind of we're looking for the start of some good reaction. So 2.5 actually holding very well. And then what I expect to happen into Friday is I want it to kind of grind up into this range and then reject, and I want to see a continuation lower because then I want to catch some reversals around here. But what do? We just consolidate, and then we go kind of manipulate into the highs on into the higher end of this range, or this new range, I guess, on Friday. And then that's when we can start getting real detailed, right? So London session, let me mark it out and delete that for now. London session Friday, London session Friday. We see on ES, going back to standard deviations, ES makes lower low right there. Higher low on NQ. So marking it out on ES again. ES, we mark it out on the indice that creates the SMT. And this was the start of the move that then created this lower low right there. So 2 standard deviation, good reaction there, holds the daily open. All right, that makes sense. 2.5, that ends up being our London high. So we get a nice clean rejection off of that a couple times. I wasn't awake for that, so I'm not playing that. But it's very interesting, actually. I don't know if this is an anomaly. The 4.5, that's my favorite reversal area. Lines up perfectly with 7495, which lines up also with previous month mid. So already, I really like that level. But we actually make a new lower low here into New York session. It barely sweeps these levels. So I'm wondering if that's why this ended up still being valid, right? Because it doesn't really go deep and then kind of force us to draw a drastically new range. I guess you technically could, but ES didn't even actually make the SMT here. It was actually NQ. And it was this low that created the newest SMT. So we actually have to, it was this like kind of little high there that produced like the final SMT right here, right? So we're actually gonna have to mark it from there, not there. That's why, so marking it from there. And you just see, 2 gets rejected, but never continues, kind of bounces from that area and then is not able to even make a higher high, just gets dragged lower. My focus would just be on ES though. I just view ES as the is running the show. NQ is like the battered down puppy dog little brother that's hiding behind big brother kind of thing. And, keeps asking big brother for help if he wants to go up or not. So I'm kind of more staring at ES right now. Again, there's a lot of rotation going on right now. ES is holding up a lot better. Sorry, I'm still fucking sick from this week. YM showing, actually pretty good signs of rotation. Defensive stocks, healthcare actually had their best week since like 2022. So still lots of rotation going on. But anyways, so 4.5, that lines up very perfectly with previous month mid, and 7495 I've seen as a previous big pivot level. So right away looking for in the order flow, I'm long at this point and I'm wanting to hold, being Friday, I want to hold for kind of a further reversion back into the range. I would like to hold it until at least 75.10, 75.12 area, but we see good rejection. I was saying looks like a squeeze around here because buyers were still buying aggressively, but then we have our first sign of a big seller right here. We see some stacked imbalances get created. We see buyers continuing to try, but they're just getting absorbed at the highs, and then right away I screenshot this. So I was like, crucial pivot. If we can't hold here, then it's looking down from there. And then just rejected and never came back again. And then just continued to sell off. So kind of we're seeing strong buyer absorb, and then when they want to push, they can push cleanly, but then they push into a level that you expect a strong seller to appear, and that strong seller then absorbs and pushes the other way. So it's kind of like a frustrating, very even ping pong match between 2 very strong participants that defend kind of respective levels. So that's where I'm saying like my strategy is really paying off as far as saving me a lot of L's that I think you would get on continuation strategies or inversions because you're having to have wide stops. Basically, continuation strategies have been getting destroyed. The name of the game is, the name of the game is buying where you see a strong participant riding their coattails until you see the other strong participant, then go the other way kind of thing. So extended moves are few and far between. Then I'm marking out this standard deviation right here because ES makes a higher high, NQ nowhere close. So I'm marking that out. That's from that low because it was this high right here that swept and created the SMT first. But of course, we're going to do it all the way to the top of the range. And so yeah, from that 5-minute little low right there to there. So yeah, it wouldn't be here, because this move up, right, where it ends is still below that last high. So there's no SMT created yet. So it has to be from there to there. So mark it out from there to there. You see right through to the 2. I like that. You know, after a little bit of chop, you see it just move quickly. Again, if we started to chop and then we started to go higher, I'd be so like not interested in shorts. But we just like normally, as you would expect, revert. You know, you can even go breaker block, right? So there's a little continuation for you. And rejected. And then we move cleanly into the 2 standard deviation. And we hold the 2.5. The 2.5 lines up right with basically midnight open price, midnight open, true day open, whatever you want to call it. And that was getting bought all session like their life depended on it, while NQ was just struggling and creating lower lows kind of thing. So there's a few theories here, basically. Number one is if you look at CVD, if you're on order flow, so there's a lot of nuance to this, especially right now in this market. There's a lot of hedging going on between options and futures. So you could look at it as one of 2 ways. And again, you can figure this all out by not front running it, and just looking at what price does next. So 7437 getting bought all session like their life depended on it, you know, heavy selling coming in here, but then we're just, we're coming down, but CVD is climbing up. So this is either absorption for a much larger move up, or this is just, they're just holding the bottoms in purely out of option spike kind of basically. So basically, if you look at gamma, GEX, if you trade that, there's a ton of negative gamma down here, right? So this is a large concentration of put contracts that are slowly going in the money. So they're slowly going deeper and deeper into profit as price moves down here. So that is making all these contract buyers a lot of money. The sellers, largely funds, institutions that sell them on the other side, they start to lose money in this case. But we're in negative gamma territory. So what do? They start to have to sell the underlying asset the further we get down into here to hedge their bets, essentially. They cannot be directly exposed. They always want to be delta neutral. So they're not trying to be overly exposed one way or the other. It's not like they're going to go, yeah, screw this market. Let's just buy put contracts too. Like that's not how it works, basically. So they're trying to keep the market in balance here. You'll see a large concentration into the end of the day, 7,400. And so that can act as a put wall, put support, whatever you want to call it. Varies on different sites that track these. So basically market makers, they'll try and keep it kind of around this level, because if it goes too far deep, then the bottom could really open up. And for various reasons, they might not want the bottom to open up. So if there's no news, if there's no data, that can really pile into this selling. And it's really just like a no news whatever day, Friday end of day. It's very easy for them. It's low volume. It's very easy for them to just hold this market up. And one of the ways they can do it is by buying futures. So they can buy the underlying futures contracts. So that could be it. Could just be them buying futures contracts like heavily, purely to just hold the bottom in, to counteract it. And it's enough buying pressure where, it looks kind of like absorption and sellers just really can't crack the lows, because there's volume and there's aggressive selling, but it's not enough. It's not overpowering enough. It's not backed by any data or news where you can really see the bottom open up. So that could be multiple ways. So if it's absorption into next week, you're going to see this level hold and we're going to start to push higher. Right now, that would be interesting, because look at all these lows here, right? These are very poor lows. So one thing I have learned about this market is every now and then, poor lows will actually stick, and they will stick as like a target for future strong selling, right? So you'll see all these poor lows. You'll see sellers continuously trying to sweep all these lows, and then it'll just continue to get bought up, and then it'll turn into a big squeeze into the highs, and then and then it'll be all buyers for a little while. And then later, at a later date, these lows will be like open season for a really big sell day. So that could be it. That could be possible. You could see 7437 just continue to buy up. If it continues to buy up, I would not, don't do anything around here. I would wait for this to sort itself out. I said too in the chat, I said I'd want to chase price above 7495. That was kind of like your big pivot at the top of that range. 7495, you can start to get active as a buyer if it reclaims above 74 or 7512. You can really start to get excited and then be like, okay, buyers are back in control. Let's start buying this into the highs again, into 7600. If 7437 breaks down, then I would look for just targeting newer lows, basically. So I would obviously look for these poor lows to get taken. I would essentially look for 73990 area, which lines up right with this 4.5 standard deviation. So 7410, 7390 also lines up with this larger time frame standard deviation around here. So that would be another target. So you could look for a short-term reversal, maybe around there or around 7410. If we're cracking 7410, I don't know. I don't know if I'd buy that. It'd have to be a very strong reaction. Then I'd just want to chase it. So if we, let's say we break down here, 7410, we see a strong V shape kind of, and we really recover and then defend 7437. Okay, maybe dabble depending on the time, right? Time and price still big, but I would really, it being summer, I don't know, it could then just chop, and I'd really just want to wait and chase above here, above 7495. That's where I'd prefer to buy above. Below, I would just look to sell to key levels. So let's say we get all the way down to 7390. Yeah, if I see a good reaction, if it's at a key open, a key time, right? Then I will take that and I will try and buy it, and I'll essentially just trail at that point, because who knows how high it could go before rejecting lower, or it could continue into the higher end of this range. So I would take that level as well if it holds. From there I would look at 73.55 and then of course 72.95. We are, it is interesting. The heat map's still showing on SPX. It's still showing a lot of negative gamma around, it was on SPX, so I think it was around 7,300. So that's actually a little bit higher on ES. That would be kind of, I would say, yeah, more around that 73.50 area. It would make sense. We could actually dip this low. It would be nice to test 7,300, 7,290. Anywhere in here would be really nice to test kind of and see what happens there, and see if it gets bought heavy, and then we can kind of look at this whole thing as a manipulation, and then we can continue higher. If we lose that area, then I would look for kind of a new standard deviation set, and I would be targeting kind of 70.040 area. But yeah, ultimately I would really, really like to see what happens here if we get down to 72.90. If not 73.55 / 73.90. Those are kind of key levels that I'll look for buyers to defend. And yeah, if if none of that happens, and like the earlier what I mentioned, if we just end up leaving these poor lows in and then it just gets continuously squeezed up and bought, then I will look for 75.10, 75.12 to flip. And then I will be targeting right away. I think it was 75.27. There was a skipped auction there. So I'd target that, and then I would just continue to target these highs. Like looking at the way these highs are, yeah, it kind of looks like they're ripe for the taking as well. So very interesting that, end of day just did not sweep through there. So I'm really just going to wait and see what happens, see what the news cycle brings us, see what, Trump is having less and less effect on this market whenever he says, the classic garbage, Iran really wants to make a deal, blah, blah, blah. It's just, I don't know, it's a mess right now. I don't know how this thing sorts itself out. It is, between tech and Google and that poor earnings report, and then you have Iran just escalating fast. What I would really, one scenario I could really see happening is we take a quick swing down. So, okay, I would say 3 scenarios. Scenario A is 74.37 was getting heavily absorbed because we are then going to squeeze directly from there. We're going to rip to the highs, maybe all the way to 7,800 area. And it is going to be our kind of last hurrah blow off top. I'm always looking for that. And then we're going to see some mecca selling days. We're going to see everything get annihilated. You're going to see Bitcoin going down. You're going to see gold crashing. You're going to see that nothing will be safe. Your Costco's, your Walmart's, they'll be going down like 3-4%. At that point, it's like, yeah, call your parents, call your grandparents, tell them to liquidate their 401ks, stash money. At that point, we're in for a bear market kind of deal. That's scenario one. Scenario two is maybe you see some type of reversion, and then we continue lower from here. So let's say we go back up, we test the higher end of this range, reject 75.24, maybe, again, like I said, if we're above 75.12, I'm going to assume buyers are back in control. Well, we'd have to see how that plays out, but let's just say from either 74.95 area, 75.12 area, you see a rejection back down. We're looking back down here. And like I said, those levels that you're looking to hold. So let's say they hold. Again, you see deep manipulation into these levels. Okay, well, that might be our peak fear state. That might be, you'll see every news cycle talking about debt that's been accrued, student loans, credit card debt. They'll put like the whole show on, basically saying, Iran, tech, AI bubble popping. It'll all be out there, and it'll just be like right for the taking. One thing that just tells me this market is not yet cooked is Jamie Dimon coming out last week. If you don't know, he's CEO of JP Morgan. And he's almost a better walking inverse indicator than Kramer. Whenever he says, he's bullish, the market dips. Whenever he says, I wouldn't buy stocks here, which is what he said last week, the market tends to reverse up. So, of course, he's not going to say it the day before it happens. He said it a few days ago now. But usually you can track around that week or two. The market ends up doing the opposite of whatever he says is going to happen. So it looks like he's right for a second, but then it totally flips. And then you're like, oh my God. And then everyone's caught off guard. And he's laughing because he just got retail to pile in on the side that he wanted them to. And then it goes. So I could easily see this breaking down, rejecting from wherever here. Maybe it just sells off the lows right away. Maybe it gaps down into here. I don't know. And we see it get heavily bought. You'll see the crazy fear headlines. And meanwhile, institutions will just be loading the trucks. And then you will see, again, another push higher. At that point, depending on the standard deviation that's created from whatever manipulation that happens, could project multitude of levels, could project, as little as 7,700 to 7,800. Who knows? Could even go into the 8,000s kind of thing. And that would be, again, still a rally to kind of sell off into. It would just be an extended kind of last final leg where you would see probably then the news cycles would switch to I don't know what would happen. The IRGC all of a sudden disintegrates, or Trump decides he decides for the first time ever in his life, he concedes a victory and just goes, or he just lies about it and just goes, you know what? This whole thing was a complete mishap. I shouldn't have been here, and we are leaving. And, Iran, take control of the strait, just get everything moving again. So then all of a sudden, all of that unwind happens and you see crazy buying, and then you see some maybe major breakthrough in AI. That's one thing I could really see, because that is the race right now in AI, is there's a race towards AGI, superintelligence. Governments are pushing heavy for it. They really want these companies to achieve it. They're trying to essentially automate the research and development of future AIs, which would exponentially turn into superintelligence. And governments are looking at that as whoever achieves it first is the new world superpower for a long time to come. How that works out for the world, I have no idea. But anyways, that is still the push. So that could be one thing you would see, right? You'd see this get heavily bought, scooped up, and then it would just start rocketing. And then one of these days you'd see OpenAI, Anthropic, saying they've had some huge breakthrough in AI that is going to change the world. And then the market will absolutely rush and roar in, and they'll be so excited. And that's where you could see like an absolute parabolic, face ripping rally into the end of the year. That would line up great for midterms for Trump, because right now it's looking pretty bad for him. He has nothing to brag about right now. He just gave a horrible speech at the correspondence redo dinner that they had. So that would be mission critical for Trump in the midterms. He could be, look at what is happening under my administration. We've had the best breakthrough in AI, and we're going to be a new world superpower. And everyone all of a sudden might be like, ooh, politics aside, I'm not a fan, but anyways, you might see a large swing of voters all of a sudden decide they like him again, because their 401ks would just be mooning and, blah, blah, blah. Anyways, that is scenario 2. Scenario 3, which I don't know if this is, who knows the weight of what is likely to happen, is they are so cooked as far as what's going to happen in Iran. And they, essentially don't know how to handle it. The strait has been closed for way too long. We're facing an energy crisis knocking on the doorstep. Basically, there's a lot of countries that are getting very close to their mission critical reserves of energy, oil, gas. So we're hitting a crisis point, chokehold, and things could really just drop off. And this would probably catch a lot of people off guard, especially traders. You're looking for kind of this manipulation and then these big sell days kind of thing, to confirm kind of that it's over. And what might actually just catch everyone off guard is if it just continues to sell. If it just continues to staircase down, and then it just continues into bigger sell days, and the buyers get weaker and weaker and weaker. That would, it's funny, you kind of assume what's the least likely scenario, and then that ends up being the scenario that happens. It's possible. I don't know. Because sellers are just, it's consolidating, but it's kind of edging down. So we'll see. I don't know. Those are 3 scenarios that I could see. If we just start staircasing down like that, then you're really going to have to be, I think, a standard deviation master. That's how you're going to have to play it for the levels, because it is going to be brutal trading in that scenario. So, we will see on that point. But yeah, those are the scenarios I could see. I would watch those levels for next week. I don't think, let's take a look at earnings next week. We are calendar going into this week, Sunday, Monday. So AstraZeneca, okay, we're getting to healthcare defense. Oh, Visa, okay, yeah, so Visa will be good. Coca-Cola, there we go. Microsoft, Meta, Wednesday. That is after hours, of course. Like the true dicks that they are. It would be way better if it was pre-market. But so after hours, and then you have ARM that day too. So we start to get into some real good AI. Everyone, because they're also involved in that kind of accounting sleazy scandal as well. Apple earnings next week. So we will see. SK Hynix. Oh no, that's Stryker. Sorry. Wow. That would have been... When is SK Hynix? Did that already happen? I don't know. Anyways. So next week, big earnings week as well. You could play that as well. You could look at, if we start earlier on in the week, if we start into this range earlier on in the week, I would actually look at those earnings to be beats, to be really bullish. But if we start to revert into this range again, if we go higher, kind of chop, we're not really reclaiming 75.12, 75.25. 75.40. If we're not moving higher and higher into that range, if we're just chopping and consolidating, and then we get into Wednesday, Thursday again, I would look for the market to continue breaking down further, kind of thing, just based on where price is at, and then as those earnings are coming out, we'll see. Big earnings next week still, and then let's take a look at the calendar here. Sorry, I should have looked at this ahead of time. That's Australia. Consumer confidence on Tuesday. Ooh, that'll be good. Can't wait to see how consumers feel right now. I don't know. Stuff is expensive. FOMC on Wednesday. Oh my God. We got FOMC and we have earning after hours. Holy crap. All right, next week is going to be a good week to trade GDP. There's going to be lots of action. Yeah, wow. Good week to trade next week. Let's see. All right, I think that's it. Those levels, we're at half an hour. That's a long video. It's too long almost. All right, good luck next week. Trade safe. Bye.